Hey everyone, this is Kirk here again at OptionAlpha.com, members only video update for April 26th. So you have to love trading. I mean, honest to God, today's one of those days where I really love being a part of the market. And I'm not saying that sarcastically. I'm saying that because it changes so fast and you really have to be on top of it, at all times. And this is one of those instances where everything leading up to the close and really just after the close suggested that tomorrow we're going to be much higher than we are. And then good old S&P comes in and downgrades Spain another two notches and knocks us right back to basically where we started the day at. So again, it feels like we're on this entire roller coaster, just, basically making no ground, just kind of bumping between all these different levels. And we're going to go over here tonight on the video, but honest to God, you have to love it. I mean, there's no other place in the world that you can get this type of movement just so instantly. I mean, these days, news travels so fast and it's so instant that it gets priced in. It's just unbelievable. So, of course, the big story, like I said, is the S&P downgrade of Spain. And of course, if you haven't read the headlines, you should. They downgrade them two notches. Pretty significant downgrade to knock them down two notches. Typically, it's about a notch when they go out, but. I think the biggest thing is that their deficit, Spain has already disclosed their deficit's going to be much larger than they originally targeted. So, again, this is cause for concern, absolutely, but the markets have known about this. This isn't new information. I feel like that's what people don't understand about this. And it was a shock that they downgraded them right out because nobody was really looking for that, right? And everyone was too focused on earnings. They didn't really see S&P coming out and downgrading them two notches nonetheless. But the whole idea of the budget deficits, the market has more or less priced that in, right? I mean, if it gets much, much worse, then it hasn't priced that in. But we already knew that they weren't going to meet their targets for 2012. That's why they have that big austerity program going on over there. So you have to just take that into consideration that the markets aren't stupid. They're forward looking as always. So they're never looking behind or right now. They're always looking ahead. So even with the rally that we've had over the last couple of days and really the last couple of months, it's still forward looking on what things are going to be in the future. So again, you can take a look at that. The other big news, I guess, is just earnings. I mean, earnings from a bunch of different companies have been pretty well. Amazon is probably the one that really kind of is taking all the news stories. And if you look by the chart here, you can see that they're probably going to open up somewhere above 220 tomorrow, which is where this blue oval is. And you can see it right now in after hours, they're already trading at almost 14% higher than where they are now. So they absolutely killed it. And I don't think many people were expecting them to do it because they've been off the highs from really the latter part of September, August. They haven't really rallied with the rest of the market like a lot of the other stocks have. Apple, some of the other tech stocks, but they really blew it out of the water, and they're going to make a pretty significant move higher. So I think if Amazon can hold above this level, say 210 after the initial selling, I think it might be something to take a look at for your long-term portfolio. So as we get to looking at some of the other indexes like the S&P, the RUT, really today, and I had all intention before S&P downgraded of coming here on the video today and saying, hey, take a look at this. We kind of made a double bottom. We've broken out, right? And tomorrow it seems we're going to trade right back down below these levels. So, but for the time being, just looking at what we actually have on the charts, it looks like we kind of broke out of this little range that we got caught in for the latter part of, or for the better part of April. And we've just been bouncing around back and forth, having pretty significant swings, 1%, or so a day, which has been pretty significant. But it looks like we've actually had a real strong, significant bounce off of these lows and lows that we've been putting in, a couple times. So the real question is going to be how strong are they, right? And can we hold above this level and continue higher? Once we start knocking on the doorstep of the recent highs, then there's no doubt we're going to continue to move higher from there. So obviously tomorrow will be pivotal. Do we crack down below? This is just a little fake out, or is this really the start of something new? And really we see this across the board on the S&P as well. What you will notice is that on all of the technicals that I watch, CCI, Bollinger Band, or CCI, Stochastics, RSI, MACD, they've all practically tilted higher, practically given the signal, right? CCI in this case hasn't given that signal, but we take a look at MACD. MACD actually made the cross, right? The cross that we always, look at and talk about here on the blog. It actually made that bullish cross, where the black line crosses above the dotted red. That's the signal. So it did make that move. We look at other things like the S&P, and I'll flip over to that chart here. Again, you can see same thing with the S&P, right? We've made that cross with MACD. CCI has made the buy signal already. Today was the buy signal, right? So we got that green arrow. We made the cross above the zero barrier. We look at things like stochastics and RSI. Oh, those are pivot points. We look at things like stochastics and RSI, and it's really convincing. I mean, even the stochastics are convincing in the sense that, and let me just make these a little bit wider so you guys can see them. But if you look at stochastics and RSI, you can see that we've already bottomed off the lows. And actually, we're showing pretty strong bullish divergence on these two indicators. And these are momentum indicators, right? So we have a market that's making equal lows up here, right? So basically the same exact low, right? It's hitting that same resistance area around 1350. And yet we have momentum increasing in the underlying market. So that's great. That's what we want to see, right? This is the opposite of what we saw back in here in the latter part of March, where we saw declining momentum and the market making even highs, right? It's just the same thing, just flipped around. So the market making even highs, or in fact, even higher highs, if you want to go look at it like that. It was making higher highs here and here. And with declining momentum, it just inevitably turned into a downtrend from there, right? Or at least a little bit of a sell off. So from here, we do see increasing momentum. That's positive news for the market. But again, the thing that's really going to hurt right now is the S&P downgrade, right? That's kind of taken a lot of the wind out of the sails for the market. Like you go to the futures market, and here's a look at the intraday futures on the E-minis or the S&P futures, right? So this is Wednesday, this is Thursday, and here's Friday starting to trade. And you take a look at these and you can see that we had a strong rally into the close, right? Strong rally into the close. A lot of volume into the close. And right after the close, we get knocked down, right? We're practically right where we were yesterday, right? Jobs numbers weren't that good today, but we kind of shrugged that off and we rallied. So from all this, right, and all this talking, I know I've been rambling on here a little bit. What's the plan? What's the strategy? Well, I think we did a great job entering both of our put spreads that we have now, right? That's the key, right? We have a 680 put spread as our first strike, and then on the S&P we have that 1230. So I think we did a great job with those because we kind of caught them right before the market turned up. It just happens to be, pretty lucky move that the market has turned pretty quickly. I didn't think it was going to turn that quickly, but it did. And so I'm happy about that, right? So we have some room. We have, some exposure that keeps moving away. That's great. So now the plan is going to be to start adding to the top side, right? So I think with the S&P stuff and with all the earnings that are starting to come out, this market is going to continue to be dragged down and kind of be pulled in a tug of war between earnings, which are going to send it higher, and Europe news, which is going to send it lower. So more or less, I think we're going to start seeing more sideways action. Now, whether it's something like that or whether we start to see something like this, whatever the case is, something similar to really what happened in May, June, July of last year as well, where we had some pretty wild swings, of a couple hundred points. I think that's what we're going to start to see, where the market is excited and then depressed, excited, depressed. So from here, the idea is going to be to look for more call spreads and look for more put spreads. I think on any downward move, that's a really good opportunity to start adding put spreads for the next month out. So starting to look for June right now, because June is obviously going to be a little bit further out. So we're going to have a little bit more time, a little bit more premium. The VIX still hasn't really moved off of significant lows, so it's still in the 20s. And so if we can get some spreads that are a little bit further away, so 1175, 1150, etc., that's going to be a little bit better trade. I think for the rest of the week and heading into the beginning part of next week, it's just going to be a, kind of play by ear thing. But a lot of naked puts are going to be coming up here pretty soon. So as always, you can turn those into spreads. You can just add the extra option on the other side and make them a little bit wider if you want, just to capture some premium. But I think establishing some naked put positions early on in the cycle are going to be really beneficial to us for the second quarter of this year. so that we can get some of that premium involved earlier, right? Instead of kind of waiting for the last part of the month. I think we're at a good point now where we could see a lot of volatility, which is great. So let's get these on earlier, get them on farther away, so we're a little bit more protected. Again, that's going to be the strategy going forward. So I think we're kind of stuck in a little bit of a trading range until we aren't. So that's the way I'm going to play it. I'm not going to assume that the market is going down or going up. I think the bias right now is up. That's what all the technicals are showing. So we'll see how this S&P downgrade really affects things from here. But for the most part, it looks pretty much bullish to flat, at least on my radar. So as always, hope you guys enjoy these videos. Please add your comments and share this video with other members, of course. Let me know what you think. Always interested to hear your thoughts. Happy trading.